Hi, everyone. In today's show, we will talk about the first quarter GDP reduction, and also we will talk about the most recent NATO summit.
All right, and we're going to be looking at the fourth quarter results for Nike. According to the IVoT Nike Forecaster, the baseline value is now $31, over 50% below the current $70 share price. And this continues a dramatic cash flow decline at the company since a year ago. So we're going to look at what it's going to take to turn Nike around fundamentally. And even if they can, can they create enough cash flow to make it a good investment? Welcome to IVoT Ion Investing, a discussion of the markets and investing from a long-term fundamental perspective. Uh, our host, Ed Butowsky, is out on vacation this week, so I'm the founder of IVoT, Emile Westergaard, and our equity analyst. I'm here as usual with our esteemed IVoT market analyst, Andrew Tang. Welcome, Andrew. How was your week?
It's good. It's definitely a short week. School's out, kids are around, and 4th of July is on Friday. So I expect very light volume in investing, trading, and most people are traveling. How about you?
Well, I'm down in Lima, Peru, as you know. It's winter here, so it's cold. It's a bit cold in Lima, or cold for Lima is like the 50s and 60s anyway, and very humid, like 90% humidity. But it doesn't rain; it's just humid. Anyway, it is earnings season we're heading into right now, pretty soon. So that's going to be interesting. We get to update all our IVoT forecasters for the latest quarter. Again, these tools are built with what we would call source code, SEC filing data every quarter. They're updated with the latest cash flows. Today, again, we're going to look at Nike in a little bit, but I'll let you get started, Andrew. Why don't you tell us about what you see going on in the economy and the markets at the moment?
Yeah, I would summarize it this way. From a high level, if we look back at since the beginning of the year, most of the institutions and investors around, they are coming in a little bit more bearish than what actually happened, right? So investors were positioning continuation of uncertainty from tariffs. They also have thought that the earnings projection for S&P 500, namely, it's going to be down versus up. And this AI overspend could be a nasty bubble that's forming. So all of the above items actually turn out to be the opposite, right? So what has happened, the AI spend confirmed by Jensen Huang after the NVIDIA earnings have really strengthened the entire tech sector that are, revolving around this AI spend. And we see that the demand for compute just for inference, meaning just for running the model, it's going to outpace any estimates that were given, right? So that really secured their growth and supply for the next several years, right? And we don't see any meaningful competition showing up, especially from China, which the US is monitoring very, very closely. And uh, the growth trajectory and the estimated spending on capital expenditure from companies, it's confirmed and it's held quite steadily. And then going into the earnings for corporations, it was a real surprise because there were upside revision versus downside. And so that's why we see in corporate earnings, it shows a V-shaped recovery, and hence the market, namely the S&P 500, showed a V-shaped recovery as well. And so that's really no surprise when it comes to the correlation to present price to futures earnings, the reflection of the stock market prices. And lastly, we will see that the first quarter of GDP revised further downward. So we were initially estimating that the first quarter of the nation's output, it's at negative 0.3%. So a couple of days ago, the revision came in and reaffirmed that the first quarter of GDP actually came in at negative 0.5, 0.5%. Okay. So the contribution to the negative GDP further down is the reiteration of the massive amount of goods that we imported, right? Businesses wanted to actually front run the actual tariffs kicking in on April at that time before it was extended to July, and July is right here. And so, yeah, there will be some uncertainty. But going back to Q1, we also saw consumer spending was greatly reduced down to 0.5%, 0.5%. And so, when you put the two and two together, the revision is down 0.5. So the natural question comes, do you think that the second quarter is going to be a repeat of the first? And that's a largely no. There will be reduction in trade, that's for sure. But we're seeing a steadily improvement in manufacturing activities that are shown in the leading economic indicators. And so that gives me great confidence that from the domestic manufacturing and economic activity side of things, we're actually improving. Okay, even though the leading economic indicator is still in the negative territory, but we pivot from a -4 movement to a +4 movement, So I see this very meaningful pivot, and that will be a positive contribution to the Q2 GDP calculation. Now, on the flip side of that, I don't think we're going to be massively importing goods now because I believe that, we're still first, we still are burning through the inventory that we accumulated in Q1. And businesses will put on pause and let's wait and see what's going on. The White House is still not making things extremely clear when it comes to tariffs. The US is still negotiating with different countries, making deals with different companies, and so on and so forth. So I believe that the domestic economy, it's going to prop up the GDP, but import export, I think is just going to be more of a muted content or part of the GDP equation. Yeah. So what do you think, Emil?
Well, no, I was going to say, so that all sounds reasonably positive, I guess, for the
Yeah.
economy.
Mhm.
What does that mean for this fight going on between Trump and Powell on the Fed on the interest rates?
Yeah, many people have asked me that, hey, do you think Powell is going to be ousted and so on and so forth? I say no. His position is quite secure. Uh, Even if the White House named a successor earlier, it still doesn't mean that he can unseat Powell like that. It's just not that easy. For the Federal Reserve to remain independent, away from influence from the White House, it's really important for this institution to remain neutral and to have this balance of power so that not one side of the government has too much power. And so even if Powell doesn't lower rates for the rest of the year, he's still not going to be unseated. There'll be a lot of name calling, which I really don't like, but we strongly believe that Powell's position is secure. And a lot of that comes from that the price adjustment. The price
Yeah,
adjustment from tariffs actually kicking in. Like for example, EU already approved at a high level on a blanket 10% tariff,
yeah.
on goods, and then the 25% tariffs on imported cars and car parts. That is still there. I'm hearing bits and pieces and sound bites, about negotiations, but so far, I know that the White House is working with GM and the domestic automakers to cut some type of a deal, but the details are still remain to be seen. And so there is going to be some volatility, some price adjustments. But the good news is overall, tariffs are not going to have a direct heated inflation influence onto the data. And the reason why is that the price increase or the price adjustments is shared by both businesses and consumer.
Yeah.
And consumer will ultimately let the business know that is the price increase going to be allowed or not? So that's why we think that the inflation portion of it, it's going to be muted. It's not going to be even, and it's going to be shared. So that's why the outcome of inflation, actuality, what's it going to be, to what effect it's going to, or how is it going to affect the CPI to still remain to be seen. Right now, U.S. inflation is running at about 2.3. True inflation read on inflation is about 2.1. So we're really on the edge of 2%. And so looking at the metrics of the economy, there's really no need for the US economy to run on restrictive environment. And that's why, yes, in my opinion and many others as well, is that we do have the green light to cut rates. But will he cut rates? We don't know. I mean, take a look back at last year when the Fed cut a whole 1% and the bond yield actually gone up. So that is a silent disapproval of the decisions or of the current policies. But anyway, so going back to Q1, we don't think this is going to be a repeat. We still think this is an anomaly, and the growth is fundamentally confirmed, at the grand scale of things.
And so, I mean, I guess just briefly, any thoughts on the tax bill, that's going, been, the Republicans are trying to push through, and does that impact anything? And then secondly, maybe just a quick update on China, if you could. I know you've got your, ear to the ground there. Any thoughts on what's
Yeah.
going on there?
Well, wow, there's a lot to unpack there. The tax bill, yeah, it's definitely more of kicking the can down the road, even though we have made some strides. I think one of the single most important thing is for the tax reduction to extend. If we don't extend it, it's going to affect a lot more people immediately, versus you know, uh, staying the same and creating this or continuing this monstrous spending habit. um I mean, is Congress, I mean, right now the politicians are working very hard to try to come to some type of an agreement, but I say, it is related to the markets, but not so much, right? Politics,
Yeah.
it's always going to be a problem, when government is getting bigger and bigger. But thank goodness the Department of Government Efficiency is still working in the background. So that's a good thing out of it. Is it getting the results that initially thought and estimated? No, we're not. But just through a combination and aggregate small changes, I see from the reports that we are moving in the right direction. I'm very happy to see that. The current debt exceeded $37 trillion dollars. Okay. The nation's debt is growing 29 billion per week. And again, I monitor on a weekly basis. Okay. 29 a clip every week. There seems to be that is just the ongoing spending and also the interest payment. That goes again, we are ready to cut rates, to help reduce the interest payment for sure.
Right.
And the nation's debt, fortunately for us in the US, we have the arsenal and we have the talent and we have the growth that is behind us, right?
Yeah.
We're not another country that facing extreme tariffs and our manufacturing it's going to have to shut down and so on and so forth. That already happened with NAFTA and all the manufacturing jobs going away in the past decades. So now it's actually quite the reverse. We see an improvement in manufacturing activities, and if all the monies that were pledged to build out AI infrastructure and build out manufacturing facility in the US comes true or starts to break ground or even take shape, then I will bet your bottom dollar that the US will go through an extended period of growth. And so for the US, we can absolutely grow out of it for sure. And if we have a
Yeah.
combination of reducing spending and grow out of this, yeah, I mean, the US it's in a pretty good place.
All right. Well,
Yeah.
that's great stuff. Maybe we'll save China for next week just to keep things moving.
Yeah,
Uh,
overall, just to summarize things, China, they're still going through a lot of struggle. We did talk about deflation, prices continuous coming down. There's lack of confidence in investors. The domestic economy is not robust enough to cover the holes. China is going through a debt spiral, and unemployment is a huge issue, especially for young people, for young graduates. Now add this to the fire. China was pretty cozy with Taliban.
right.
China was initially investing roughly about $150 million with an oil development project with Taliban. But just recently, Taliban terminated the contract and just kicked China out of their country, from
Wow.
Afghanistan. So that's one hit, one blow. Another blow is that the EU is fighting China just like the US is. So I'll give you an example in an extreme case that EU imposed 65% tariffs on hardwood plywood
Huh.
with China. And Chinese trying to, navigate that around by mislabeling their goods, but then EU stopped that. And
Wow.
so I could give you more, but overall, it's just that China is going through some rough time right now. And there's also rumor, and I can't confirm that to be true, but many say that it is, that Xi Jinping just had a stroke based on the physical appearance, the fatigue, and the lack of ability to concentrate. And he was missing for 3 weeks. And so the health of the leader, it's in question. And could this be a time for a change in China? It very well could be. And I'll leave it at that.
I mean, I guess is succession there pretty much laid out, or is that going to turn into something of a challenge?
There are some candidates. There are rising stars of especially the son of Hu Jintao. We believe that he's one of the strong candidates that can take shape and be a leader in the CCP. But again, this is way too early to speculate.
Okay, well, thanks and welcome back, everyone. It's time for our look at the IVoT stock of the week. This week it's Nike, and they reported their fiscal fourth quarter last week. The stock bottomed out in April at about $54, is currently trading at 70, and traded up on what was really a terrible fourth quarter. So investors seem to be hopeful that the company is going to rebound. That being said, I'm going to open up the IVoT tool here, and we can discuss what's going on at the business. The well, here, let's just get there, and then we'll start talking about it. So here's our platform, just so everyone knows. Again, sign up to get early access. We're going to be opening this up very soon. These are our toolboxes along with our training. And I'm going into my toolbox here. I'm going into the library and I'm picking up the Nike tool. And this was just updated for last week. So they reported $442 million in cash flow. That's down from $1.6 billion a year ago. I mean, that's pretty ugly. And negative 73% off of a negative comp from the prior year. So cash flow at Nike has just been in free fall for quite a while now. And you basically do the math, that gives you a $31 intrinsic value based on the IVoT method on a cash flow basis versus a $71 stock price right now. So it actually, despite being well off of its highs of a year ago where it was up as much as I think $120, it's down at 70 right now, but looks expensive on the current business. What happened in the fiscal fourth quarter? Sales declined by 12%. And operating margins, not surprisingly, given that really terrible sales performance, their cost of goods went up by 400 plus basis points. 400 and what is that? Let me close it here. It's actually worse than that. What? It went up by 630 basis points. That is a mess, and that is ugly. Um, so the question is, why is the business such a mess? I mean, this is the premier consumer brand in sports for the last 30 years, and yet somehow over the last 2 years, it's been falling apart. Um, I think it's an actually interesting case study. Excuse me. In terms of business, right? And maybe we can talk about that, and then we'll come back to the tools. So let's just give a little context to why things are so screwed up at Nike, and then we can kind of think about what's going to happen going forward. So, as far as I can see, and I've been looking at Nike for the last couple of years, you know, they saw something with their, so they started really, I don't know, Nike stores have probably been around for 10 plus years, but I think management kind of got greedy basically and said, hey, we're making, twice the selling price and probably 50% higher gross margin plus operating margin anyway on sales through their own stores. So they started really promoting their Nike stores, both, the shops themselves, opening them up more of those and selling more direct online to customers. Well, that sounds great. $100 pair of sneakers at retail is $100. They get the whole $100 instead of the wholesale $50 price, let's call it. So, on some level, that looked obviously good. But in classic business school fashion, what's going to happen to their distribution channel? All the stores, all the big chains that carry Nike are now competing with their with Nike themselves. And I think that real Andrew, you speaking? I can't hear you for some reason.
I'm sorry. Yeah, I can talk a little bit about that as well. The
Yeah, but I mean,
Nike,
and let's discuss that. But basically,
yeah,
it seems pretty clear that they lost the good faith with their distribution
absolutely.
channel.
Yeah.
And at this point, they're trying to backtrack. And what you see is in the most recent quarter, direct sales were down 12%, channel sales were down 9%. So they're both falling off a cliff. Meanwhile, they're trying to upspend on sales and marketing to get sales growth back. But once you lose your channel, it's hard to get it back.
Yeah, absolutely. And that really is true. I think what happened with Nike is it's really an underestimation of how important your distribution channel is. Because for a while, thinking that Nike can just do the same amount of sales doing direct, uh, a couple of things are happening is that it will take a lot of overhead. It will be a tremendous amount of increase in expenses. You're opening stores, you're taking on huge overheads, right? Trying to sell direct, because everything is not done online. People still like to go to stores, touch and feel, and try on shoes, right? This
Yeah.
experience, I don't think is ever gonna go away, right? And so there's also a bubble forming with the secondary markets with Air Jordans and Nike shoes and so on and so forth. And I think there is a little bit of fatigue in that area as well because several years ago, my kids was nagging me to go to a shoe convention. Do I hear about that now? No, I don't hear about
Yeah.
that at all, actually.
Sounds
And
like a
then
fad. Sounds like a classic fad almost, right?
yeah, yeah. I mean, to some degree, they're still there. The fans are there, obviously.
Yeah.
And then from time to time, you do a limited release, a collaboration with another, meaningful brand. Sure, that can happen,
Right.
of course. But it's not as crazy as several years ago, let's say 5 years ago, just to put a number there. And then we walked around in strip malls and the larger malls. We walk into Foot Locker, we walk into other sports store. You see Nike losing prime real estate there, right? I walk in front and center, there's Hookah shoes. And then front and center for running, there's ON, there's On Company. And where's Nike? And then I see that it's somewhere else and the inventory, it's actually pretty stale. And so it really does not give a warm and fuzzy. And when you piss off,
Yeah, and you can look at Adidas, for example. Sorry, I didn't
yeah,
interrupt, but you can
exactly.
look at
No,
Adidas has
you're
been
absolutely
growing,
right. Yeah,
right? So if this is definitely company specific. It's not. I mean, there are, again, consumers are still going to buy sneakers and they're going to
yeah,
like, cool product. But yeah, no, I think everything you're saying is really good. I think the tactile issue too, as you said, it sounds great to sell a lot of stuff direct online, but people like to try on sneakers, walk around in the store with them. I mean, some stores even have like running machines where you can try running on them and stuff,
yeah,
whatever.
yeah,
So
exactly.
yeah.
Yeah, great point. So how can we turn, I mean, how can Nike turn around the company?
Yeah, well, I mean, let's go back to the tool for a minute because again, just to play with trend, right? If you want to think that let me just find it here. Hold on. There, if I let's say this is a 3-year compound forecast. I mean, they just lost 12% sales growth, and it's been terrible for the last bunch of quarters. If they can get this up to 10% sales growth for the next 3 years, if they can rebound to that, that still only gets you to $37. Now, if they can get their margins back down, but the problem is if they begin to support their channel again, that is going to have a negative impact on gross margin, right? Because they're not going to get that direct sales. So I don't know, but let's say they get this back down to 55% in 3 years. That gets you
Yeah,
to $74, which is about where it's trading. So you'd have to believe better than this to consider it, to find that there might be a bargain here.
yeah,
I think this is a pretty bullish scenario given the current situation. Now, again, it's Nike, it's still a great brand, and I mean, I don't know that there's been a big, threat to management yet. I mean, it's not like, Starbucks lost its CEO around
yeah,
similar poor performance issues for a kind of best in class brand. So, but definitely management is going to be under pressure here to get at least these kind of numbers up. And again, that's how we look at it from a long-term fundamental perspective. And again, our approach here to investing is always, you're looking to be an owner of this brand over the long term.
yeah. But
Um,
Nike has a new CEO. His name is, I believe, is Elliot Hill. So
okay, sorry,
yeah,
and he came in when?
I think towards the end of 2024,
Okay,
October
yeah,
to
all
to
right.
to
So
to be precise. Yeah. So he recently came in and obviously trying to turn around the company. But again, to be honest, I think just to be conservative, I think it's going to take at least 1 to 2 years, for the changes to happen. And I think, like you said, 3 years. I think 3 years is it's a fair timeline for the company to turn around. We're already seeing pretty good demand for Kalen Clark's the blue Nike shoe that's been sold out. That's
yeah,
becoming a really hot item. Uh, and then Nike can work on the apparel for other sports, so it's
yeah.
not just sneakers, it's all about apparel as well. And so, yeah, unfortunately, with this type of good, a lot has to spend on marketing, unfortunately. Yeah.
Well, yeah, and the other interesting thing is the sales weakness is global, right? It's
Mhm.
not like, oh,
Yes,
they're weak in North America, they're weak in the EMEA, Europe,
true.
and they're weak in China, Asia Pacific, all pretty similarly negative
Yeah.
growth. So the brand is struggling. Um, it's
Under
interesting.
a not friendly macro environment, so it's even more challenging to turn around,
Yeah,
because the macro is not even behind you. So it's true because that's a reflection, the decline sales globally in sports apparel. It's an indirect and direct function of consumer spending and also consumer confidence. It's all-time low right now. Uh, yeah, we're still there. So I'm gonna here show this chart. This is consumer confidence, and you see that this is approaching a triple bottom here, going all the way back to the 80s.
consumer confidence. Wow, that's interesting.
Yeah,
Okay.
yep.
Um, all right. Well, any last takeaways from you just as we head out the door, Andrew?
Yeah, I mean, the economy as we see it is really a tale of two economies. We have the AI growth, we have the mega companies, the mega cap companies continuing this cap spend. And then on the flip side of things, those who are living paycheck to paycheck, they are not secure with their jobs. And their income could be greatly affected. And that's why we see consumer confidence, it's low. So it is the tale of two economies.
All right, great. And well, we have a lot of new forecaster tools coming up in the next couple of weeks, updates for the next quarter. So it'll be interesting to see how cash flows trending across the various businesses we're looking at, including companies like Palantir, companies like Amazon, companies like Apple. We have a lot of companies to look at over the next couple of weeks with new numbers. So that'll be fun with the tools. All right. Thanks a lot, Andrew. Great show. Great week. Again, if you want to learn more about IVoT, come to our IVoT Academy, watch our shows here, and subscribe to our channel. And we will see you next Tuesday on IVoT Ion Investing.
Stay cool. See you soon.